But yeah, let's go over a little bit of everything today. I definitely wanna, bro said I have a dream and now I can't dream. Chill, bro. Yeah, yo, I'm down to run four after we're done with this. I'm down to run four. Mayan, what's good, baby? What is good, my G? What is good, everybody? I'm gonna give it a couple minutes for everyone to get in here, and then we will start the live. All right, I'm gonna give everybody like 2 3 minutes. I'm gonna put a fucking hoodie on. It's freezing in this apartment for some reason. Back it up. Hope everyone had a great weekend. Um, I know I definitely got active, maybe a little too active, but it's perfect because today is going to be a nice work and reset day. Um, can everybody hear me and see the screen? All right. Crazy. Yo, this guy Meatball Pipe wants to speak. Should we let him speak?
What up,
Yeah.
late?
What
I
is
was getting
good?
my coffee and my yogurt ready.
Yeah, so Pipe actually took like 5 trades this morning.
Yeah, I took
Um,
like morning.
on MLK Day, which is crazy.
Yeah.
Which is crazy. Which is crazy. Now, honestly, there was a nice like 5 minute inverse to the upside, but at the same time, it's like, bro, what the fuck are you doing if you're trading on a bank holiday? Right? Like, bro, the best part about trading is that you're on your own schedule, bro. You live a free life, you live a chill life where you can hop on the charts for 2 hours a day, not even every day of the week, and make bread, right? And if like you're ruining your conditions and you're risking capital that you could risk on a higher probability day just because you need to get your fix in for trading that day, like you're fucking degen, bro. Like that
Yeah.
shit is not fresh.
Trading
Um,
on it is high key insane.
yeah, it's
Mm.
crazy.
Yo, you tried this yogurt?
Yeah, that shit's kind of good.
It's the nuts, bro. Zero added sugar, zero artificial sweeteners, 0% fat, 15 grams of protein.
Yo, are the markets just not moving?
Yo, I checked the ingredients and I thought they were gonna be terrible, and they're not that bad. Like, there's no like chemicals in it. The only problem
Fire.
is they're expensive and they expire in like 2 weeks.
Oh, that's whack.
Mm.
That is whack. It was half a day on futures. Yeah, okay. Imagined. All right. Ladies and gents, let's cook today, bro. Let's absolutely fucking cook. There's a lot of things that I want to go over today. Um, I've been seeing a lot of questions about exactly like, okay, what I took this trade, but what model is this? Like, I see a lot of people mistaking the mech model for something that it's not. I see a lot of people in their journals like talking about, oh, I took this mech model, and then I take a good look at it, and it's not actually a mech model. Or I see like continuation models, or I see V-shaped recoveries that aren't actually V-shaped recoveries. So I want to kind of just like go over all of that, clear the air, make sure that you guys understand exactly um, what our trading models are, what our strategy is, what the entry model looks like, and kind of just give you guys like a better understanding of exactly how to identify these trading models. Um, because it's not as simple and like discretionary as some people take it. So let's go over it.
Yo, Sekiri just sent out a cinematic masterpiece of a message. Edo's not gonna get it. He's gotta read it like 6 times before he understands.
Yeah, I don't get it. I do not get it at all.
Don't explain it. Let's just keep going.
Bro, what?
Give it like 2 more times and he's got it. I'm telling you. I know.
Nah, I'm just giving up. All right. Can you explain it? What the fuck does this shit mean, bro?
Just chill, bro. If you know, you know.
All right. Is a new trading strategy? No, it's not a new trading strategy, but it's going over more in depth on everything that we trade.
Bro, he was responding to Sekili's comment.
Oh, yo, I'm fried, bro. All right, let's get into this. All right, so what is our strategy? Okay, so the basic foundation of our strategy is based on fair value gaps. Okay, whether they're on the lower time frame or the higher time frame, our strategy is based on fair value gaps. It is the act of making conditions and understanding how price is reacting to fair value gaps on the lower and higher time frame. Okay, so are fair value gaps this magical fucking thing that the market movers use? No, but they do help out with understanding the relationship between time and price and the relationship between how the market moves on the higher and lower time frame. Like, it is really one of the easiest things to understand and one of the easiest things to use. Like, we don't use order blocks, we don't use CISD, we don't use turtle soup or any of those other complicated things that you've seen, or like breaker blocks. We don't use that shit. We don't use like the fucking Fibonacci bullshit unless it's just to see like what our equilibrium of the 0.5 range is. And a big part of the reason why our strategy works and why people have such an easy time grasping it is because we keep it simple, right? We keep it very, very, very simple. And it's that simplicity that makes it easier to become profitable. Like when you're not worried about 10 different confluences, when you're not worried about 30 different things to go over and to check off your checklist before hopping on a trade, it makes trading easier. Because you don't have to fucking be like, oh, this happened, that happened. Okay, what if that happens? And fucking there's an order block there and there's this and there's that. No, right? Fair value gaps are the main thing that we look at. Liquidity sweep, fair value gap, SMT. Okay? Those are the 3 main things that we actually use on a daily basis. Why do we use it? Because there's clear ways to understand where price wants to go, right? For example, we made this entire move down, right? If I just look, I'm on the 4-hour time frame. We made this entire move down, okay? And then what happens? We have a 4-hour bearish fair value gap right here. What happens? Price inverses this 4-hour bearish fair value gap after clearly making a huge manipulation down, sweeping all of this daily liquidity, all of this weekly liquidity, all of this, tapping into these premium 4-hour bullish gaps. And then what does it do? It has an inverse and it pushes up higher. Okay? How is it so easy to use this? Look at what happened last time we tapped into these 4-hour. Last time we tapped into these 2 4-hour bullish gaps. What happened? Price respected it and then pushed up much higher. Now, price makes a move, price comes down, all the way down, retests these 4-hour, respects them. What happens? Inverse to the upside, big move up. Okay? Then what happens? We chop around. Well, that's like too recent. Let's go over here, right? It's clear structure, right? A lot of people, you'll see, look, move down, move up, move down, move up, move down, move up, move down. What happens every time we tap into one of these 4-hour bearish gaps without inversing it? What happens every time? Look at this. 4-hour bearish gaps right here. Price goes in, taps into it. What does it do? Lower low. Price comes back up, taps into this 4-hour, sweeps liquidity, goes all the way back down. Right? Then we finally inverse it, and what happens? Move up. We create a higher high. Okay? So understanding the relationship between fair value gaps, the relationship between time and price, and forming it with a liquidity sweep is going to be the best thing ever. Now, let's go over, that's just simple, right? I just want to show you guys, like, obviously you guys know this. I'm not fucking teaching anything new. Just showing you guys how the relationship between these fair value gaps, whether they are being respected or whether they are being inversed, tells you where price wants to go on the higher time frame and on the lower time frame. Now, how can we use this to actually formulate a trade? Right? Take this for example. Okay? We have this huge sell-off Friday, October 25th. Okay? This is a clear draw on liquidity. Clear draw on liquidity. Right? So I mark it out. I have this huge wick to the bottom. I have this huge move down that swept all of this liquidity. And now we don't retest this area for weeks. Okay? For weeks. But look at that fucking swing low. It's clearly a draw on liquidity right here. Now I mark it out, and what happens when we come down and take that same draw on liquidity? So we come down, we have this massive liquidity sweep, okay? And now I want to know if we're gonna push up higher and have a bullish reaction out of this. How do I know, right? First of all, I have this 4-hour unfilled gap right here. I have a 4-hour bearish gap right here. What do we know about fair value gaps? We know that price is attracted to them. Okay? Price is attracted to unfilled gaps. That is just something that we know from backtesting, from studying the charts, ICT, all that good shit. All right? We know that price is attracted to those unfilled gaps. So now we have this 4-hour and we have this 4-hour. Let's see if we can find something on the lower time frame. Now I go to the 2-hour and I see that we have these 2-hour highs. That's the 4-hour. Let's see something lower time frame. Back it up. Right when we had the liquidity sweep. Let's go to the 15-minute. Okay, so right when we had the liquidity sweep, we created a 15-minute bearish gap. Now, let's see if there was a mech model here.
Dude, I am not gonna lie to you. I had the tournament bracket set up, and I just realized there's a small problem, so I'm fixing it.
Yo, well, what is this day? All right, we gotta find a different day. Either way, okay, what is the entry model, right? So we have price moving, let's say, in an uptrend. Okay, higher highs, higher lows. Okay, now let's say we chop around for a bit. Chop around for a bit, and then we make a higher move up and sweep this liquidity. Okay, now you have right here, this becomes a draw on liquidity. Why? Because we moved away from it for a good amount of time. We left this resting liquidity above. We made a move lower. Now we have this draw on liquidity. What happened last time that we hit this level of price? 27,750. price went down. Now, price moves back up, sweeps the liquidity. What can we now infer that price is going to do? Have a move back down. Okay, now let's think about this. Let's say on the way up to this draw on liquidity, we created a 5-minute bullish gap. Okay? We created a 5-minute bullish gap that's unfilled. And on the way up to sweep this liquidity, we also created a 2-minute bullish gap. Okay? Now, how can we use the MEC model? What is the MEC model? The mechanical model is a way that we enter on trades targeting unfilled gaps after a clear liquidity sweep. Okay? After a clear liquidity sweep. Because a lot of people make the mistake that they just try to use the MEC model at any time. Oh, we tapped into a 30-minute, we tapped into this, blah, blah, blah. Let me use the MEC model. Let me take a MEC model short or long. No. The real MEC model has to be off a higher time frame liquidity sweep or a higher time frame tap into a bullish or bearish gap. Okay, but it has to be an unfilled gap. It has to be a premium gap. Okay, so not just any random 4-hour bullish gap or daily bullish gap. It has to be a premium one in the leg. Okay, and then we get a lower time frame inverse fair value gap targeting a higher time frame unfilled fair value gap. Okay, so let's say we make this big move up. We sweep this higher time frame liquidity. We create a 2-minute bullish gap and a 5-minute bullish gap. Now, if I want to catch a short, right, I have two options. I either catch the inverse of this 5-minute gap and I go for a longer trade, or I can try to get in even earlier. Okay, so let's say, for example, that we have a 5-minute bullish gap. On the way up to sweep the liquidity, we created multiple 1-minute gaps. Okay, we have a 1-minute bullish gap here. Hold on, let me make this blue. Okay, let's say we have a 1-minute there. We have a 1-minute here. Okay, and then we have a 2-minute, which is this one. What is the MEC model? The MEC model is taking the highest time frame inverse of the leg targeting the unfilled gap, right? So if we get this liquidity sweep, am I going to take the inverse of the 1-minute bullish gap? No. Am I going to take the inverse of this 1-minute bullish gap? No. I'm going to take the inverse of the 2-minute bullish gap targeting the unfilled 5 as break even. Okay, so where would my entry be? My entry would be swing high, targeting these lows. Okay, because of the RR. Look at this RR, right? So this is a way to get in early on the MEC model. So I have a liquidity sweep. I have an inverse of the highest time frame fair value gap, which is this 2-minute. I don't take the 1-minute inverse. I don't take the 1-minute inverse because if I take a 1-minute inverse and then I'm inside of a 2-minute gap, that 1-minute inverse is now invalid. So I have to take the highest time frame gap, right? I have a 2-minute. I'm going to take the inverse of the 2-minute. And what am I going to do? I'm going to target the 5-minute unfilled as my break even. Now, if I look at this, if I zoom out and I look at this, what is the MEC model? Technically, the MEC model is targeting the unfilled gap. So my TP would be right there. Okay, but if I look at the RR of this trade, I'm not going to TP there. I am going to TP down here. I'm going to go break even once we tap into the 5-minute, okay, and hope that it runs down. Now, if I get break even, that's fine, Why is that fine? Because now I just have to wait to see, okay, is this 5 minute gonna get respected, or is this 5 minute gonna get inversed? If this 5 minute gets inversed, I can simply just re-enter here, take the same trade, 1-to-1 RR, and we're chilling. Okay? But I had the opportunity to get in earlier on the move with this 2 minute inverse. Okay? Now, let's say that it looked a little different. Let's say that the liquidity sweep happened and then it actually had a much bigger move. Okay? And same thing here. We have these 1 minute bullish gaps. Let me move this. Won't let me fucking move it. There it is. Okay. Now let's say that we have this move right here. Okay. The liquidity sweep happens and it goes all the way up here. Okay, now our 5 minute gap is here. Now if I look at the RR, okay, we have the 2 minute inverse and we clearly have a 1-to-1 right here that's barely inside of the 5 minute. Now what am I going to do? Am I going to hold until all the way down here? No, I'm definitely going to take partials at a 1-to-1. I'm going to take this, targeting the unfilled gap, and I'm going to take profit. I'm going to go break even the second it taps into the 5 minute. Okay, the second we go into this, and I'm going to go TP at a 1-to-1 right here. Okay, I can either take partials. I would probably full TP this because we're clearly in an uptrend. So we're just taking advantage of the liquidity sweep and a retracement, right? It's taking advantage of the fact that we know at certain levels of liquidity, we're going to have a retracement. So I'm taking advantage of that. So am I going to hold all the way here? No, because that's not a retracement. That's a complete change in direction of price and order flow, right? So where am I going to take profit? I'm going to take profit at the unfilled 5, and I'm going to full close there, and I'm going to take the fact that I was able to take advantage of a retracement. Bang, that's the MEC model, okay? These are the MEC model trades. These are the real MEC model trades, okay? Not like in between here. I see a lot of people that are taking MEC models when we're inside of like this. When we're inside of this zone right here, people are trying to catch a MEC model, right? That makes no sense to me. Okay, because if we're just chopping around, we're making moves, yeah, we're tapping into 30-minute, 1 hour fair value gaps, blah, 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 all this, but we haven't swept any higher time frame liquidity. We haven't taken anything serious. And now you're telling me that you're ready to take a MEC model long or a MEC model short. That makes no sense, right? MEC model, higher time frame liquidity sweep, higher time frame tap into a fair value gap, and then a lower time frame inverse targeting a higher time frame unfilled gap. That is the MEC model, right? And it works on all time frames. Okay, if I have a 5 minute inverse, okay, like it happened right here, okay, I can take this 5 minute inverse targeting the next 5 minute unfilled or targeting the 15-minute unfilled gap. Okay, I can take this. Where is price right now? Let's see if there was something that I can go over today. Look, right here, perfect example. Okay, literally perfect example. We have a liquidity sweep. Okay, look at this. We're chopping around. We left these lows. We come down. We take these lows. Clear liquidity sweep. Okay, and then what happens? And then we have a 5 minute bearish fair value gap here. Okay. What am I going to check? First thing I'm going to check after liquidity sweep, do we have a MEC model targeting this 5 minute unfilled gap? How do I check to see that? I check every time frame under the 5 minute. So I check the 4 minute. Do we have a 4 minute targeting this gap? No. Do we have a 3 minute targeting this gap? No. Do we have a 2 minute targeting this gap? No. Do we have a 1 minute targeting this gap? Yes. Oh wait, actually, no. That's not, I thought that was a 1 minute. So there's no lower time frame fair value gap in between price right now, okay, and the target being the unfilled 5. So is there a mech model targeting the unfilled 5? No. So what am I going to do? I'm going to wait for either the 5 minute to get inversed or to see 5 minute bullish structure and confirmation of bullish structure and take a continuation, right? But that's a continuation. That's not a mech model. So what do I wait for? I see that the first thing that happens is that this 5 minute bearish gap gets inversed. Okay? Clear inverse right here.
Yo, I just wanted to interrupt for a second and let everybody know that the error that I had made with the tournament bracket has now been corrected, and the matchups have been posted in the announcements channel. So I know Sakili's in it. I'm not sure what other names I read. There's 20 people. The seeds are completely randomized, so there's no number 1 seed.
Yeah, yo, if you guys are asking questions, I'm gonna answer all of your guys' questions as soon as I'm done with the review session. Just like write them down, and we'll go over them at the end. So look at this 5 minute, right? We have a clear liquidity sweep, and then we have a 5 minute inverse. Now, why can I take this 5 minute inverse? Because if I look right above, we have a 5 minute unfilled bearish gap right here. Okay, we have a 5 minute unfilled bearish gap, and we have these highs above. Okay, we have these clear highs above that were left, that we wicked above, and this is a clear draw. Okay, this is a great trade, bro. That's exactly what we want to see, right? Accumulation, sweep of liquidity, and then a continuation or inverse to the upside, right? Accumulation, manipulation down, sweep of liquidity, and then distribution. Okay, that's exactly what happened this morning. AMD model. And this is the beauty about having the exact models that we trade, because they all go hand in hand. There's a reason why we trade V-shaped recovery, why we trade continuation, why we trade AMD and mech model. It's because these 4 models go hand in hand, and they can be used together. Okay, so 5 minute inverse targeting the next unfilled 5. Beautiful, right? That's a great trade. Where am I taking this trade? Bang, right here. Okay, taking this, targeting a 1-to-1. Okay, all I want to see here is a nice 1-to-1. That's all I need, right? So what happens? I get the inverse of the 5 minute right here. This is my entry point, the close of the 5 minute inverse. If this candle tapped into the unfilled 5 before it closed and it still inversed this first candle, that is not a valid entry. Bro, this is something I see in like so many people's journals and so many people that send their trades and ask me if these are valid trades. That is not a valid trade. Okay? If my 5 minute candle that is inversing this 5 minute taps into the premium 5 minute bearish gap, but still inverses this, it's not an inverse. Now it has to inverse both of them. Okay? It's a very important thing because I see it happen all the time. Like this right here, okay? We have this 5 minute bearish candle, okay? This one right here. All right, that's 5-minute bearish candle. What happens with this 835 candle? It inverses this 5-minute candle. Yes, it does inverse this 5-minute bearish candle. But at the same time, it tapped into another 5-minute bearish candle. So is this a valid inverse? Is this a valid inverse right here? No, this is not a valid entry model. This is not a valid inverse because it already tapped into this. If you're going to take an inverse when there's another same time frame gap right there, then you have to wait for either both of them to get inverse or you have to take one targeting the other unfilled. But if it's filled, that's no longer a valid inverse. And then what happens? Imagine you took this. What happened? Bang, stop loss, right? So this is a super important thing. Now let's go back to this trade. I see the 5-minute closed beautifully after the liquidity sweep, 5-minute inverse fair value gap, targeting an unfilled 5-minute. So what do? I take the trade, okay? And then what am I targeting? Just a simple 1-to-1, right? The second price taps into that unfilled 5, I move my stop to break even, and price goes up and hits the 1-to-1 for full TP, okay? Then what happens? Then price inverses this 5-minute, okay? Right? Because in the moment, I don't know if this 5-minute that I'm targeting unfilled is going to inverse or not. So am I going to hold past a 1-to-1 if I don't know if this 5-minute is going to inverse or hold? No. I full TP at a 1-to-1 right here. And then now 5 minutes go by, I see that this 5-minute got inversed. So now there's really nothing that is stopping me from going up to these highs, right? Because this 5-minute earlier got inversed, barely, but it got inversed. So what is the only thing in between price right now and my target? The only thing in between price right now and my target is this 5-minute bearish gap, but the 5-minute bearish gap got inversed. So now I took a MEC model long. It didn't go all the way up and sweep the liquidity yet, and now we created 5-minute bullish structure. So now we have 5-minute bullish structure after a liquidity sweep. This is another entry model. This is the continuation model. So the first one was the MEC model. Now what you see presenting itself is a continuation model. What is a continuation model? It is a liquidity sweep. It is a creation of a 5-minute or 15-minute bullish gap. Like we did here, we created these 3 5-minute bullish gaps, and it is a tap in to the 5-minute or 15-minute bullish gaps that are created and a lower time frame inverse to the upside, continuing the order flow that we got after the liquidity sweep and making sure that these fair value gaps are being respected. Okay, so the continuation is dependent on the 5 and 15-minute bullish gaps that we created to be respected. So we created these 5-minute bullish gaps. We see that we come down, we tap into the 5-minute bullish gaps multiple times, and then we create a 5-minute bearish gap. Okay, so now we have a 5-minute bearish gap after coming down and tapping into all of these 5-minute bullish gaps. So what is the continuation model? The continuation model is seeing what is the highest time frame inverse of the leg down into the 5-minute bullish gaps that we created and respected. It's this 5-minute bearish gap. How do I know if we are going to respect these gaps here? How do I know we're going to respect them? If we inverse the highest time frame fair value gap that we created on the leg down to tap into the fair value gap. So what's the highest time frame one? This 5-minute, right? Because there's a 4-minute right here. There's a 3-minute right here. But what's the highest time frame one? It's a 5-minute. So I have to wait for the 5-minute to get inversed. The 5-minute gets inversed right here. Where is my stop loss? Where is my take profit? My stop loss is at the 5-minute swing low. My take profit is at a 1-to-1 targeting these draws on liquidity, okay? I'm targeting these highs. That's the main difference between the MEC and the continuation. The continuation, I'm targeting liquidity. I'm targeting highs. I'm targeting data highs, New York Open AM high. I'm targeting London session high, Asia high, PM high, whatever it is. I'm targeting these hourly highs. Okay, that's the difference between the MEC model. The MEC model, you're targeting unfilled gaps. Continuation model, you're targeting liquidity. So now we have a 5-minute tap in, continuation of that 5-minute through this 5-minute inverse, and what happens? Price hits TP. Okay? Why do I not take the 1-minute, 2-minute inverse, right? Because right now, if I look at where we were, actually, let me go back to the 5-minute. Let me mark things out.
Yeah, let me interrupt you one more time again. Sekili, did you buy any alpha futures eval in the past 5 or 6 days? Because I'm not sure what I can look up Sekili on the affiliate thing. And if you did buy one, what name did you buy it under? I don't think he's answered.
I bought 24 evals.
All right, I'm gonna mark it as no for now. If you did buy one, reach out to me personally, and we'll figure it out.
Okay. I'm gonna go over this last thing, and then I'm gonna start reading some questions, and then we'll go over the next model. So on the way down to tap into that 5-minute bullish gap, that's marked out right here. We created multiple 1-minute bearish gaps. But why am I not interested in these 1-minute bearish gaps? Because that is not the model, right? The model is the highest time frame inverse of the leg. Okay, so of this entire move down, what is the highest time frame inverse? Is it this 1 minute? No. Is it this 2-minute gap right here? No. Is it this 3-minute gap right here? No. Is it this 4-minute gap? No. It's this 5-minute bearish gap, right? So before you guys are entering trades, notice how on every time frame there were gaps that you could have perceived as the highest time frame inverse. It's crucial that you are checking all of the time frames before entering. I can't tell you how many times when I first started trading that I would think that maybe the 2-minute was the highest time frame gap. I would be staring at the 2-minute to wait if it got inversed for fucking 10 minutes. I would wait for the 2-minute to get inversed. I would never get off the 2-minute time frame. And in the meantime, as I'm waiting for the 2-minute to get inversed, a 4-minute was opening up. A 5-minute was opening up. And then I would take the 2-minute inverse and then I would lose the trade. And then I would ask myself, why did I lose the trade? Let me go over it. And then I would look at the other higher time frames and I would see, oh shit, we created a 3-minute, we created a 4-minute, and we created a 5-minute. While I was just stuck staring at the 2-minute, right? That's the biggest problem. You have to be aware of everything that's going on the higher time frame constantly. You have to constantly be checking the higher time frame. Constantly be going in between the higher and lower time frame. You should be moving through the charts like you're in the fucking Matrix. Okay? You guys see me when I'm live trading, bro. I check all the time frames. Every 2 minutes, I'm checking different time frames. Every minute, almost, I'm checking different time frames to make sure that I'm not missing out on any messages that the charts can give me. Because every minute, every time a new candle creates on the lower time frame, the charts are telling you something. They are telling you something about the movement, about where it wants to move and how it wants to move. And if you don't look at the higher time frame, you're going to miss out on what's the big picture. Every time there's two new candles on the 1 minute, there's a new candle on the 2 minute. Every time there's two new candles on the 2 minute, there's a new candle on the 4 minute. Every time there's 5 new candles on the 1 minute, there's a new candle on the 5 minute. Something else happened on the higher time frame. Every time there's 3 5-minute candles, something just opened up on the 15-minute time frame. Something important just happened on the 15-minute time frame. Every time there's 2 15-minute candles, something important happened on the 30-minute time frame. Something important happened on the 1 hour time frame. If I don't check every single fucking time frame every 3 seconds, I am going to miss out on key levels. I'm going to miss out on fair value gaps that are being created. I'm going to miss out on what is the true reaction and movement of price. How are we reacting to these moves? How are we reacting to these levels? How are we reacting to these fair value gaps that are being created? That is crucial. Like extremely crucial. Because, for example, let's see this, okay? Let's say right here, okay, we have these 5-minute candles. We have this 5-minute bearish gap. This is the most premium 5-minute bearish gap that's currently holding. Okay, if I look at 11:10 a.m., okay, if I look at 11:10 a.m. right here, what does it look like on the 5-minute time frame? It looks like we are respecting the 5-minute bearish gap. Okay, at 11:10 a.m., okay, I'm talking about 11:10 a.m. It looks like we are respecting this 5-minute bearish gap. But what actually happened? What happened at 11:10 a.m., at 11 a.m., is that the 15-minute bearish gap got inversed. So should I take shorts off this 5-minute bearish gap holding and take this short? Or should I appreciate that the 5-minute is manipulating lower even after inversing the 15? So the 15-minute just confirmed to me that we are going to go up to these highs. It confirmed to me that we don't care about this 15-minute bearish gap. We're going to push up higher. And now I can use the 5-minute as my entry model. I can see that we're reversing, that we're manipulating on the 5-minute, but I don't perceive it as the delivery. If I was just on the 5-minute time frame and I saw this big 5-minute bearish gap, big move to the downside, I would perceive it as a delivery, that we are going to deliver lower. But in reality, if I look at the 15-minute time frame, I can now understand that this 5-minute move is a manipulation. And I don't want to catch the manipulation. I want to catch the delivery. Because the delivery is always going to be higher RR and higher probability than the manipulation is going to be. Okay? So that's why you always have to make sure that you're taking the highest time frame inverse and that you are checking every fucking time frame every 2 seconds. All right? You got to get autistic with these charts. If you're slow at moving through the charts, go onto Forex Factory. Go onto Forex Factory. Do 3 days of backtesting as fast as you can. As fast as you can, but making sure that you're not missing out on anything. Try to do it quick. Try to every time you click the skip button 2 times, check every time frame. Check every time frame, now you go back. Right? You made your daily bias. You know what your targets are. You know what your conditions are. Okay, set those things up. Know what your daily bias is. Know what your targets are. And then now on Forex Replay, every time you click the skip button 2 times, go through all of the fucking time frames. Okay, go through all of the time frames. Make sure that you're not missing out on anything. Bang. I know I'm good. I know what happened on the lower and higher time frame. I'm going to click skip another 2 times. Now I'm going to do the same thing over again. I'm going to click skip 2 more times. I'm going to do the same thing. I'm going to go through every time frame. I'm going to make sure that I know what happened on the lower and higher time frame because of those 2 candles that were now created. And now I move on. That is the best possible exercise that you can practice to get better and faster at moving through the time frames and understanding and knowing what's happening on those time frames. Because you have to be all knowing when you're trading. When you really want to be a profitable trader, when you really understand this game, it is about awareness. It is about self-awareness and awareness of what's happening in the charts. Am I perceiving what's happening in those charts the right way? Because sometimes you could think that, this is a liquidity sweep, now we're going to push down lower, but you're not looking at the higher time frame. You're not seeing that we still have daily highs above. That liquidity sweep, there was no bearish gap that could make that liquidity sweep go lower, and now you're going to switch your bias to bearish, but in reality, you should still be bullish and just wait for price to manipulate and then catch the delivery. Does all of that make sense to you guys? I'm going to read through some of the questions. I know I just yapped for a fucking 30 minutes. Yo, Max. Max. What are you doing?
Yo, what up, Sekili? Yo, I don't know if you heard my question before, but I asked, did you buy any evals on Alpha Futures?
Bro, imagine I was actually muted. I would kill myself.
And if you did, what name did you buy them with? You could also DM me personally if you don't want to write your name on here or whatever.
Okay. I'm gonna read through some of these questions.
John Pork.
Do I care about what?
Because what we're doing for the tournament, and you
I
guys
what?
have time to go and do it, is if you
Yeah.
guys buy an eval, you guys have
Just
an
the
extra
unfiltered, the
life,
organic
which basically
unfiltered one.
means if
The one that you can squeeze out of the bottle.
one of you loses a
That
round,
go.
you just get to move on regardless. You can only get one life per person, but that's why I'm asking. This is pay to win.
Say it's like 5. Should you avoid going live on account? Say it's like 5 to 6 payouts to go live. Do I just not take the last payout? Yeah, I mean, I try to avoid going live. Like, if it's 5 payouts to going live, I'll make sure my 4th payout is as big as possible, and then I'll just rinse the account on purpose. Or I just won't trade it and it'll cancel itself because of inactivity. But it depends, going live could be a good test on yourself if you want it. I personally don't like going live with prop accounts. I'd rather go live on my own account in the future, but some people see it differently. Disregarding V-shaped recovery, if you trade in direction of the trend, you always take a continuation model. So what I'm trying to say, and also as Blake says it, even if we rally and make it for value gap, then we trade into it. Also liquidity sweep. Start liquidity setting TP to void is risky as fuck if there are no orders to fill and book maps. I don't really understand if that's a question or not. Should you avoid going live? Yeah, just answer that. Should the trade go with the flow of the current push, but there is now a significant difference? So the trade, yes, the continuation model is always going to be the highest probability model, the highest RR model, okay? So the continuation is always the best model. When you go in continuation of the higher time frame, bias of the higher time frame draw. But sometimes market open does the opposite of what you think it's going to do, okay? And that's part of the game. It's normal. It happens all the time. So the other models that we have, the V-shaped recoveries, the MEC models, the AMDs, those allow you to take a trade even when price is not going in the direction of your higher time frame daily bias. Right? But yes, the continuation is always going to be the highest time frame. The highest probability trade. Can I send recording after completing the session? Yes. Oh yeah, I'm retarded. I don't know why I said backtesting on Forex Factory. Backtesting on Forex Replay. A lot of stats and collecting. Can't check time frames randomly. Those time frames need to be aligned with your strategy. It gives you a statistical advantage. For example, rates on 16, 17 time frames. Yeah, I mean, when I say checking through the time frames, when you're day trading, all of these time frames I have on my screen are relevant. At every single second of the chart, every single one of these that I have is relevant. Obviously, I'm not looking at the 7 minute or the fucking 8 hour or shit like that. But these that I have on my screen are relevant at every single second, and I need to know what's going on every single one of these higher time frames and lower time frames.
I read it all that. Oh, it's so fucked up. But I just feel like that's complicated.
Took that 5 minute entry and had TP at 348, got stopped. Which one are you talking about? I'm guessing 348 is this, so you're talking about this trade. So this is a good example. Why do I not target this high? Because if I'm taking a mech model, okay, I'm taking this 5 minute inverse, targeting, what is the actual target? The actual target is not this. It is not this high. Because there is a unfilled bearish 5 minute here in between me and the target, right? You have to ask yourself, what am I targeting for this 5 minute inverse? The real target is this 5 minute unfilled, okay? Why? Because that is how the mech model works. Liquidity sweep, and I don't know if this 5 minute is going to get inversed, okay? So if you want to take a 5 minute inverse, targeting this 348 liquidity area, I think that's a great trade, but you would have to wait for both 5 minutes to get inversed. And now your entry would be here, okay? And now you would have to, go break even once we take out the 348, and you would have hit full TP at a 1-to-1, okay? But if you're gonna enter off of this 5 minute inverse, then you need to be taking a 1-to-1, because once we tap into the unfilled 5, which is right here, okay, we have to go break even, and I don't know if this 5 minute is going to hold or if it's going to get disrespected, right? So if I don't know something, and if I don't know if a gap is going to get inversed or not, I am going to hold for a 1-to-1. And I'm going to just full TP at the 1-to-1. Now, in this case, if you don't hit the 1-to-1 and you get confirmation of this 5 minute inverse, now I can extend my TP to this high. But I now also have to extend my stop loss back down to this low. Why? Because if I took the 5 minute inverse, targeting this unfilled 5, this unfilled 5 is my break even, okay? Right here, I'm going break even, okay? If I go break even here and my 1-to-1 doesn't get hit before, if the 5 minute gets inversed, the second 5 minute gets inversed before it hits my 1-to-1, now, if this 5 minute also got inversed, that means that the true target is this high above, okay? But now the thing that made me go break even has now gotten inversed. So should I be break even? No. So that means that I either hold to a 1-to-1 being break even, or I extend my take profit and I also extend my stop loss because I shouldn't be break even at this point, because this 5-minute inverse means that this is a great trade targeting this internal high right here, but I can't be break even on that. So then you have to make a game time decision. Do I want to extend my take profit? Okay, but I also have to extend my stop loss. Or do I want to stay break even and just go for a 1-to-1, hit a quick TP, and I don't have to worry about anything, right? So that's the reason that you got break even. That's the reason that I would have gone for a 1-to-1, and you have to be able to make that distinction. Because while you're in your trade, there's things that are happening on the charts that are sending you messages, right? Every candle is a message to your brain. If I'm in this trade and I see that the 5-minute bearish gap, the most premium one, the only thing that is stopping us from going up to this high gets inversed, that's a big message to my brain that we are definitely going to go up to these highs. I should extend my stop loss. I should extend my take profit. But being break even now no longer makes sense, because why did I go break even? Just in case this 5-minute bearish gap held and then pushed down lower, I would have gotten break even instead of stopped out. But now, since this 5-minute bearish gap got inversed, I can extend my take profit, but I also have to extend my stop loss because there's no reason that I am break even. Does that make sense? Okay. More questions. What if you take a 5-minute inverse for value gap and it is inside a 1 minute once the 5-minute closes? That doesn't matter, right? The highest time frame is more important. So if I go off a 5-minute inverse, a 1 minute gap doesn't matter unless that was above the 5-minute inverse. But no, not even. Like, the only thing that would sketch me out, if I take a 5-minute inverse for value gap trade, the only thing that would sketch me out is if it taps into another 5-minute in the opposite direction, if it taps into a 15-minute, if it taps into a 30-minute, 1 hour, anything above the 5-minute, or makes an SMT. But anything below the 5-minute, if the 5-minute inverse is my entry, anything below the 5-minute, I don't care about. Does that make sense? Like, for example, when the 5-minute inversed up here, we were tapping into inside of more 1-minute bearish gaps. Do I care? No, because we inversed the 5-minute, which is more important than anything below the 5-minute. So the only thing that would bother me is another 5-minute or anything above. Anything from 5 to above or an SMT would bother me. Anything else wouldn't bother me. After a 100-point pump/dump, price retraces into a 5-minute fair value gap. We are looking for continuation. Would you take an inverse off the 5-minute tap, or would you wait for deeper retrace? If we just pumped 100 points or a dump, if we just made a huge move, right? I think the other day we made a fucking fat move. Yeah, something like this. If we make a huge move, okay? I'm done trading. If I missed out on this entire move, okay? This entire move hit all of the targets, swept all of the liquidity, and we just dumped 100 points. I am not looking for a continuation at this point, because we probably already took out all of the targets. We made a massive move. Now everyone has gotten in and out of their positions. Volume's going to go down. What is price going to do? Chop around. Price is going to move sideways. So the best answer to your question is that if we make a massive move, either to the upside or to the downside, and all of the targets have been taken, hop off the charts. You missed out on the move. It's okay. There's going to be another big move tomorrow. Don't risk capital on this bullshit. Do not risk capital after there was a huge move, either to the upside or the downside. There's no point in risking capital because volume is going to go down, probability goes down, risk to reward goes down. There's no point. Why would I want to take a continuation after we already dumped and hit all of our targets, swept all of the liquidity, took out everything? I don't want to take a continuation. It's going to be very low probability. Why? Because price chops, price moves down, price reverses after having a huge move. Okay? Let's say only half of this move happened and we still have targets below. And it's still a big move. I would wait for a 5-minute tap in or a 15-minute tap in and the continuation out of it. But if the whole move happened and you moved out and you missed out on it, done trading. Because then if not, you're gonna get caught in this. And this is stop raid. It's chop. You don't want to be in chop. Okay? A lot of people FOMO into trades. A lot of people can't stand the fact that they missed out on a trade. They can't stand the fact that price just moved so quickly in one direction and I missed out on it. No, that is the wrong way to conceive and perceive price action. Okay? You don't want to have that mentality. You got to get rid of it. Because there's moves that happen every single day on the charts. There are great moves. There is at least 2 to 3 A+ setups every day. And all you have to do is catch one of them. Okay? But if you miss out on it, you can't FOMO into it. You have to just understand, I missed out on the highest probability setup. Let me fuck off. Let me get out. There's maximum 1 or 2 A+ setups in New York AM session. If you miss out on those setups and your targets get hit, and now you keep looking at the charts and you keep trying to take trades even though the big real move that you were waiting for happened without an entry, and you keep trading, you're never going to be profitable. You have to learn how to shut the computer off and walk away. Sometimes there's days where I just fucking know, like with every cell in my body, where price wants to go. I just know we're going to hit this target. I know we're going to fucking hit this liquidity. I know where price is going to fucking dump or pump to that at market open or during New York AM session. I'm so confident in it. But I don't get my A+ entry. What am I going to do? Simply going to be like, all right, you were right. I was right. I'm understanding price action properly. I'm reading price action the right way. I'm having all of the technical analysis and thought process that a professional trader would have because clearly I'm predicting where price is going. But I didn't get my A+ entry. That's okay. But you have to be able to be okay with it. Right? Because what am I going to do? I missed out on the target that I knew was going to get hit because I didn't get an A+ entry. But if I start breaking my rules and I take a dog shit entry just because I'm confident in the draw and liquidity and I get a horrible RR trade, even though it takes profit, now I just risked more to make less. I just fucked up my whole statistical win rate of my strategy for the week, for the month, just because I wasn't patient enough or greedy, or I was too greedy to understand that my A+ entry didn't present itself. Now I just fucked up a whole month's worth of win rate and statistics. It's not worth it. It's not worth not waiting for the next day. Okay? People think about you put too much pressure on your day-to-day trading. If you put too much pressure on your day-to-day stats, on your day-to-day win or loss, red or green on your day-to-day, you're not going to be profitable because you don't understand the game. This is a fucking game. This is a career. This is a professional life choice. I don't know, like I don't want to say it a job, but it's a professional job. This is a career. This is something that people do every day to pay for rent, to pay for their expenses, to pay their fucking cars, everything, to support for their family. This isn't something that you can just hop on and magically become good at after a week, or that you think you could do things your way and it still be profitable. No. I've had the same mentality, and it's a losing mentality. I thought that I could do a million things my way in trading, and guess what? It never worked out. It never worked out because I can't just wake up one day and risk how much I'm feeling to risk. I can't risk more one day than the other. I can't change my daily loss limit one day to the next. It has to be consistent statistics, consistent win rate, risking the same amount, having the same daily loss limit, understanding that red days are inevitable, having that daily loss limit to protect myself, and I never touch it. I never overtrade. I never take more than I should, and I never lose more than I should. Now, I have just entered the zone of now trading is real. Now trading is more than just what I see online. It's more than just candles on a chart. Trading is a statistical game. It's a probability game where you have to get in and out at the highest probability time, and you have to repeat that same process over and over again and not care about the day-to-day win or loss. If I lose tomorrow, tomorrow I'm going to trade. If I lose $500 tomorrow, I don't care. Not that I don't care to learn why I lost it. I obviously care to learn from my mistakes, but I'm not going to revenge trade and fucking blow my account just because I can't live with the fact that I ended red on a day. Because you will never be profitable day to day. Profitability comes over the span of months and years. Okay, if I look at my account balance, I could be red for an entire week and still get a payout at the end of the month. But if I let my emotions get involved, I'm going to blow all of my accounts by the end of the week. And I'm not going to be able to see the comeback from the win rate that I know is statistically proven get me back up all the way where I need to be and get a payout at the end of the month. It's a statistical game. It's a long-term game. So I can't get stuck on the day-to-day. If I fuck up one week and I take some bad trades, or if just they were great trades but they didn't play out, that's okay. But I have my daily loss limit. I'm not blowing accounts. I have a red week, but at the end of the month, I still get a payout. And that's what professional traders do. Okay? That's what professional traders do. And you have to treat yourself like a professional. You have to put yourself at that level of standard. You have to keep yourself at that standard in order to become professional. Right? If one day I want to fucking wake up and turn into the next Ronaldo, okay? Am I just going to start going to play? Am I just going to fucking hop on the pitch and start playing? Or am I going to put 10 hours a day working on my craft, working on my skill? If I want to become the best chef in the world, am I just going to wake up and start cooking? Or am I going to watch 1,000 Gordon Ramsay videos? Or am I going to watch 1,000 fucking videos of the best chefs in the world perfecting their craft, and then I try to replicate it?
Yeah, I'm glad you said Ronaldo, not Messi. I mean, if we're talking about GOATs.
Bro, no, but that's the perfect example, because Messi was born with a magical foot.
Messi has the talent, Ronaldo has the hard work.
I completely agree. Messi was born with a magical foot. That guy I've watched videos of him training. It looks like he's on vacation. And then he hops on the pitch and he does magic. Okay? I am not Messi. You are not Messi. Nobody in this fucking chat is Messi. All right? I'm telling you right now, none of us are fucking Messi.
Marian is messing.
Okay? But we could all be a Ronaldo. Because what he does is hard work and dedication and consistency and training more than everyone at a higher intensity and keeping himself to the highest degree of fucking standard. You think Messi eats a fucking Twix bar? You think that that Ronaldo has ever eaten a fucking chocolate cake during his season, bro? You think that guy has ever fucking not waken up one day and stretched and trained? Absolutely not, right? Because he keeps himself at the highest standard. So you have to do the same. If you want to become profitable, if you want to be a professional, if you want to make day trading your profession, you have to keep yourself at that degree, at that standard, and you have to follow the same risk management rules and the same discipline that professionals follow. All right? No Twix if you want to become profitable.
Tomas, let me answer your question really quick. For the tournament, each trading day is going to be the equivalent of one round. I sent out the matchups, so I'll actually tell you. You are going against Nikolaj. So how it's going to work is you're going to trade for the day, and then before 5 p.m., you have to fill out the Google form again, showing me account balance, account number, details, all the things that the Google form asks you for. Whoever makes a larger percentage between you or Nikolaj is going to move on to the next round. And yeah, that's pretty much it. Can you make bets on the tournament? That'd be fun, actually.
Yeah, we should.
Yo, we should. I'm gonna send out a survey asking like who do we think is gonna win. Edo, who are you backing on it?
Bro, I don't fucking know. I wanna Biba, we should do it. We should do a tournament between me and you.
Okay, I'm down.
I'd be down. Make a side pot. And like we both start with an account. I have an account right now that's like basically at 50K. I don't
have any accounts right now. Better.
No, but it doesn't matter because you could just move like.
But I also want to lock in because I'm about to pass my final eval and alpha, so I'll just cop some shit on like Tradeify.
Nah, but I'm gonna trade it seriously. Like I'm gonna do the funded.
Biba would win because he always enters on the pullback. Bang. About a full port on Biba. Let's go. Let's fucking go.
30 minutes. I'm going to work on everything alpha related. I'm thinking out loud. But yeah. What else was I going to say?
Yeah, it'll just drop some heat for all you guys that were.
Bro, the craziest thing is that like, and this was the turning point for me when I realized like, holy shit, I'm being a fucking idiot, right? Because retail trading, bro, like it's the hardest thing on the planet. Because if you look at a hedge fund, okay, this was actually a fucking turning point. When I was in college, went to a like bank that had a trading simulation like kind of exercise for everyone that went to learn about their bank and read and whatever. And they were going over the rules that these hedge fund traders that are on a trading floor have. And guys, the institution itself, the company that hires these traders that trade on a hedge fund and are probably the best traders in the world, these guys have 10 pages of rules that they can't break, of limits to their positions, to their accounts, to how they can manage their funds, to what stocks they can invest in, to what positions they can take at what time of the day and with how much, and in reference to how much other people are taking positions on in that day and they also have SEC rules. They have so many fucking guidelines that they have to follow to make sure everything's legal. And they do it. And they do it every day. You know why? Because if they don't follow those rules, they get fired. They get sent home. Okay? They get sent home, they get fired. They no longer have a job. So for you to sit there and not be able to follow 4 or 5 simple fucking rules that you put on yourself, that's fucking sad. All right? That is I'm not going to sit here and fucking sugarcoat and be like, oh, it's okay that you're breaking this rule. It happens. No, fuck that. Fuck that, bro. Because if these guys who are just as good traders as we are, or that have the same potential that we have inside of us to be a good trader, are able to follow these rules because they know that following those rules mean life or death, why can't we instill within ourselves the same mentality? You have no fucking reason to not consider these rules life or death.
Yeah, and it's also like having those rules like ingrained into your brain. Like all those traders, they have those 10 pages memorized. They know if they're breaking a rule. They don't have to go and read the 10 pages before taking a trade. And I think everyone should kind of have your own personal rules ingrained in your brain and do whatever it takes to get to that point, whether that's writing it down and putting post-it notes on your computer or just having a piece of paper on the wall while you trade. Those rules really have to be ingrained in your brain so that you know instantly when you're taking a trade if you're breaking your rules or not. Fuck, dude, my cough. Don't hedge funds trade with bots? Dude, I don't fucking know. I don't. How do hedge funds trade, bro? Do they trade with bots?
No, bro. I talked to these guys that trade energy. They're not energy, but they trade like oil. They literally trade oil. They trade petrol. I don't know what the fuck it is. Petrol. I don't know what it is. Whatever. They literally trade oil. Okay. They trade futures, oil futures, and bro, these guys like they do all of it themselves. They don't have yeah, you have fucking like AI doing a million trades a day, whatever. But these guys are going into heavy positions, understanding the supply of oil out in the world, the demand of oil out in the world. They're looking at chart technicals, they're looking at numbers, they're looking at numbers of barrels being imported and exported, and they're taking trades. But they're taking trades on charts like ours and making millions of dollars, right? But I've talked to them and I even asked them, I'm like, what is your biggest challenge? And all of them to this day say self-control. But they said that the beauty of being backed by a hedge fund, the beauty of working in an institution is that you don't have a choice to be undisciplined. You have strict fucking rules that you have to keep by or else you get fired. Right? It's literally life or death. So we need to keep ourselves to that same degree of standard.
Yo, look at this. Hold up. I want to interrupt the little break, but like, look at how bad it snowed yesterday. Look at the roofs of these fucking buildings.
Holy, bro.
Yeah, dude.
Jeez, bro.
The streets are clean because they fucking put salt on them, but that shit's ridiculous.
Yeah.
It's kind of cool. I'm gonna go have a snowball fight with myself.
All right. So, what else? We went over the mech model. We went over the continuation model. Now, let me show you the V-shaped recovery and the AMD model. AMD is beautiful, bro. AMD is accumulation, manipulation, distribution. Okay? That's what AMD stands for. AMD. Okay? What is AMD? AMD is when price is chopping, when price is moving sideways. Okay? What does this mean? This is accumulation. Okay? This means that price is accumulating, that we're moving sideways. There's an accumulation zone. Price is just chopping within that same price range. Okay? Do we want to be trading this? Absolutely not. This is the worst conditions to ever trade in your life. When you see price move sideways, when you see one candle go a strong bullish candle and then a strong bearish candle and then a strong bullish candle and then a strong bearish candle, that is fucking chop. You want to stay away from it. You want to highlight this range that we're chopping inside of, and you want to wait for a breakout of that range. Okay, that's the most important thing. You want to highlight the range that we're chopping inside of. You want to take the lowest point and the highest point. You want to draw out a range, and then you want to see a manipulation out of it. So I have this box, right? This is the zone that we're chopping inside of. Okay? And now the next two candles are a huge manipulation lower. Okay? So in the next two candles, we just broke out of that manipulation zone. Okay? So we have accumulation, and then price breaks out of the accumulation zone. What is this? This is the manipulation. Okay? So now you highlight the manipulation zone. Now this is the manipulation zone. Do I take the trade of the breakout? No, because I don't know when it's truly going to break out until it happens in front of me. Until it happens in front of me, I don't know when the actual manipulation zone is going to present itself. So I wait. I simply wait until I get confirmation that we broke out of the range. And I'm not talking about a little breakout in like a little tick out, a little just like we slightly wick out of the accumulation zone. No, I'm talking a serious breakout of the accumulation zone. And now we find the highest time frame fair value gap that we created within the manipulation leg. Not in the accumulation leg, within the manipulation leg. Now, let's say there is a 1 minute, there's a 2 minute, there's a 3 minute, and then there's a 4 minute. Which one am I focused on? I am focused on the highest time frame one. I'm only focused on the 4 minute. So on the way down, in the manipulation leg, we created a 4 minute bearish gap. This 4 minute bearish gap is the highest time frame bearish fair value gap we created on the way down. So now, what am I waiting for? I have the A and I have the M. Okay? I have the accumulation. That was a horrible fucking A. I have the manipulation. What the fuck? I'm like actually autistic right now. Okay. I have the manipulation, which is this. Could have made that easier. Okay. I have the accumulation. I have the manipulation. What is missing? The distribution. Okay. How do I know when I see the distribution leg? The distribution leg happens when I get an inverse of the highest time frame fair value gap we created in the manipulation leg. So now I have this. This is the distribution leg. How do I know that this is the distribution leg? I wait for the 4-minute bearish gap on the manipulation leg, which is the highest time frame one, to get inversed. I wait for it to get inversed, and now this is my entry model. Okay? This is the D. This is the distribution. Okay? But let me show you where your stop loss, where your entry is, where your take profit is. Okay? If I see this accumulation, manipulation, on the way down in the manipulation, we created a 4-minute bearish gap. There's no 5-minute, there's no 10-minute, there's no 15-minute. The highest time frame is the 4-minute. I wait for the inverse of the 4-minute. I enter off the 4-minute close. I have my stop at the swing low, at the manipulation low, and I have my take profit at a 1-to-1 or at whatever higher time frame liquidity there is up here. That is the AMD model. Accumulation, manipulation, distribution. Why is it so accurate? Why is this so good to see? Because accumulation, we accumulate in the zone. Okay, we accumulate in this price range. Then price breaks out of it, but it's just a manipulation for more people to get in on the true distribution of the leg. So I don't act on the manipulation. I only act if we get the distribution. Now, if price just keeps going down, right, then what does that mean? That this was both the manipulation and the distribution. That's fine. I didn't catch the trade. I didn't catch the short. This was actually the distribution. That's fine. But if I do see the distribution leg, then this is one of the best setups in trading. This is one of the highest probability, best fucking setups in trading, especially when it is in line with your daily bias. So let's say I am bullish on the day, like we were today. Okay, let's say I am bullish. Okay? What happens here? Okay, there's two AMD models here. Look at this. If I'm on the 5-minute time frame and I see price move sideways, okay? I'm watching price just fucking move sideways. Okay? I look at this little whatever. I look at this range that we are accumulating inside of, and then I see that we break out of the range. So we break out of the range and we create this 5-minute bullish gap right here. What happens? We manipulate out of it. Then we have a 5-minute inverse. Okay? That 5-minute inverse to the downside. If I have stops at the swing high, price almost edges my stop loss. Okay? Because my stop loss is at this swing high. So it almost edges the stop loss. And then what does it do? It delivers. It delivers down below. Same thing could be said with this right here. Okay? Hold up. Right here, what do we have? We have an accumulation zone. Okay? There's 20 minutes of price action where, actually no, that wicked up, so that's not a good example. Let's find a better example. Bang. Right here, bro. This is a fucking textbook AMD setup. Look at this. We accumulate. Okay, we're moving sideways for like 30 minutes. And then we have one big candle that manipulates out of the range, that manipulates out of this accumulation zone. Okay? Look at this. One huge manipulation candle that breaks out of the range, creates a 5-minute bullish gap. And then what happens? Where does the 5-minute get inversed? Right here. The 5-minute got inversed right here. Okay? Now what is this? Distribution leg. Okay? Now we catch this distribution leg, targeting these lows and whatever lows we have to the left. Bang. That's another AMD setup, right? Accumulation, manipulation, and then distribution out of it. And which is the biggest leg? What's bigger, the manipulation leg right here or the distribution leg? The distribution leg is always going to be bigger than the manipulation leg. So that's how you take advantage of AMD. That is our third entry model. Now, our last entry model is the V-shape recovery. Actually, before I go on, any questions on the AMD? Any questions on the accumulation, manipulation, distribution?
All right, guys. I'm going to head off. If any of you guys have any questions about the tournament, anything, DM me personally. I'll answer as soon as possible. Yeah, the tournament matchups have been sent out. So if you guys signed up, go check out the matchups now. The rules are on the Google form. And yeah, I hope I don't give you guys a good lesson today.
Yes, sir. Got one more model to go over. And then we're done. So sit tight with me. All right, guys.
Is it to the tournament? Unfortunately, it is. We had set the deadline for Saturday at 5 p.m. Eastern time. But I'm sure you'll be able to sign up for the next one. No, last Saturday. All right, Edo. I'm going to head off. I'm going to go hit the gym.
Bad Zini.
Catch you later.
Bad
All right,
Zini.
I hope all you guys have a great rest of your day. Peace.
Saji. All right. So let's find an example of the V-shaped recovery. Bada bing boom bam bim boom bam bim bim boom bam bim bim boom bam. All right. I mean, this is not a horrible. It's not a bad. Okay, so look. For example, right here, we're trading. Okay, we're moving down. We're clearly on a downtrend. And then what happens? We sweep this liquidity right here. We sweep this low, and then we have a fat 1-minute inverse, super strong reaction to this liquidity being swept to the upside. Okay? Look at this 1 minute. Look how fucking bullish that shit looks. Okay? Put my stop there. My stop at a 1-to-1. Okay? Now, what is the V-shaped recovery? The V-shaped recovery is when we have a huge liquidity sweep and an immediate reaction on the 1-minute time frame. That is extremely obvious and going to be usually very high RR because it's an immediate reaction. You're going off the 1-minute time frame and you're probably going to get a fat trade in. Okay? So what happens? We have a huge liquidity sweep, 1-minute inverse, strong 1-minute bullish recovery of this whole downtrend. What happens? Goes straight to the 1-to-1. Okay? See how that happened? Went straight to the 1-to-1. When we took this internal high, I would definitely go break even. If we tapped into any higher time frame gaps other than the 1 minute, I would go break even, right? But this is when you have a super strong bias. Let's say I'm super bullish on the day. Okay, I'm super bullish on the day, but price goes down, right? I'm super bullish on the day, but price is manipulating lower, and then finally we sweep higher time frame liquidity. So it's when I'm bullish on the day, let's say, for example, I'm bullish on the day, and we come down and we sweep a higher time frame liquidity on the downside. So now we have swept a very important low, which could be this, okay? This low right here. All right, this could have been a previous day low. We sweep that low, and then immediately after sweeping the low, within 3-4 minutes, we have a beautiful, strong inverse on the 1 minute time frame. Okay, look at that. Look at that. Right? Look at the RR on that. Look, we come down, we don't even close below this. We barely close below this, and we wick twice. Okay, we wick twice. We're clearly rejecting this area. We're clearly rejecting going any further down. And then we have a strong 1 minute V-shaped recovery inverse to the upside. And it has to be super clean. You have to be very confident in the bias that we're going to go up higher, that the true bias is bullish. We just needed to manipulate lower and take the liquidity. Now we've done that, and we get an instant 1 minute V-shaped recovery. You take the trade. But it has to be perfect. You don't just randomly go off the 1 minute inverse. It has to look this beautiful. It has to be a higher time frame bullish bias. It has to be a higher time frame liquidity sweep and a perfect 1 minute inverse to the upside targeting these highs above. And you go break even relatively fast on this. Okay? That is the V-shaped recovery. It's taking advantage of the immediate reaction that happens off a liquidity sweep in line with your bias. But it has to be in line with your bias. Because if not, you would have to take a mech model. Okay? If the V-shaped recovery, if you see it, if it's not in line with your bias, then you have to take a mech model. You have to take that 1 minute, but you have to be targeting an unfilled gap, or if the 1 minute isn't the highest time frame, you have to wait for the 5 minute. You have to wait for the 2-3 minute to target an unfilled gap, right? What are we targeting? Unfilled 5 and 15 minute gaps. We are targeting hourly gaps. We are targeting unfilled 2 hour, 4 hour gaps, daily gaps, anything from the 5 and above, 5, 15, 30. You can kind of consider a mech model, right? But you always have to take the highest time frame inverse of the leg. So that's the difference between the V-shape and the mech. But sometimes they go together, right? Sometimes you're going to have that 1 minute inverse happen. That's the highest time frame inverse, and you have a 5 minute unfilled above. So now you can take that 1 minute V-shaped recovery targeting an unfilled gap, and now you have combined both the V-shaped recovery and the mech model. And this happens all the time. Even on the continuation, I can take continuation 5 minute long, but I'm targeting a 15 minute unfilled above instead of targeting a high. Now I've mixed the continuation and the mech model. Sometimes there's going to be an AMD setup where we accumulate, we manipulate, and then the distribution leg is going to be targeting an unfilled gap that's way above. Now I've mixed the AMD with the mech model, right? Or sometimes the AMD happens, okay, but I don't get a great entry on it. And we create 5 minute structure. So let's say we have this, right? Hold up. Let's say we have AMD. let's go here and then have the distribution leg be here. Okay. And we create a 4-minute here. But let's say the 4-minute gets inversed all the way down here. Do I want to take that? Do I want to take entry right here? Absolutely not. But let's say in the meantime, we created a 5-minute bearish gap. So let's say in between this, we also created a 5-minute bearish gap. And then let's say price comes up, taps into the 5-minute bearish gap, and then has a 1-minute inverse to the downside. Okay, now we take the 1-minute inverse, and now you have combined the AMD setup with the continuation model short. Okay? So you can mix and match these models. You can mix and match the strategy. You can use both of them, all 4 of them to help you out in terms of deciding where's my target, where's my take profit, where's my stop loss, what is my entry. You can use all of them. They go hand in hand. Alrighty, boys and girls. So let's bring on any questions that you guys have. And yeah. Do you guys have any questions at all about everything that we just reviewed? I know it was a lot. I highly suggest you guys to go over all of this stuff. I'm gonna this was all recorded, so I'm going to upload it onto YouTube and into the recordings tab. So I would definitely rewatch this video, maybe in segments, and go over everything. If you have any questions, watching it later on, you can always ask me. But do you guys have any questions as of right now? No questions? Question mark? I'm gonna give you guys 2 minutes. If you don't have any questions, that's great. That means I explained it very well. But if you do have any questions, I'm here for you guys. I know that was a lot of information to take in. Appreciate it, bro. Thank you. All right, perfect. All right, guys, remember, if you have a question that you think about later, drop it in the questions tab. Drop it in the YouTube comment section. I'll get back to you guys. That being said, let's have a great fucking day tomorrow. Let's have a great trading session. Let's have a great week. The tournament's starting. Make sure you guys signed up for the tournament, following the rules, and uploading your guys' account balances. We don't share the account balances with anyone. It's simply just for the tournament. We don't care. Remember that if you lose, don't just give up on the tournament. Maybe the person that you went up against also lost. So also remember, use code SPAG, Alpha Futures, if you guys want an extra entry into the tournament. If you guys want the best possible accounts with the best possible discount, use code SPAG when you guys are buying accounts on either Alpha Futures or Tradeify. Helps us out as well. So yes, sir. Yeah, it's going to be a great week, bro. I'm excited. All right. Love all of you. I will see you tomorrow for live trading. Peace.